Hi, I'm John Fitzgerald and welcome to Custodian TV for 2009. And what a fantastic start. I'm standing here February the 3rd and yes, the Reserve Bank have announced a full 1% rate drop. Now let's put that into perspective because it really is an amazing occasion. The last time we had a cash rate at 3.25%, which is what it is today, was 1964. And only previous to that, being 1960, was it even slightly less, which is 2.89, and they're talking about the cash rate potentially coming off another 1.25%. Phenomenal. Phenomenal. And as I've said before, it's something that we've never seen in our lifetime. That is, borrowing rates significantly below 6% and now possibly below 5%. So stay tuned, it really is an amazing time for us as investors. Obviously everyone's still talking about doom and gloom, and there's no doubt about it, the equities market have lost between 25 and 50% of their value. And when you think about it, 80% of Australians have superannuation, so they've lost a lot of their wealth. Now, for us under 50 or under 40 or whatever, it may not be of concern, but you can imagine how difficult it would be for people in their 60s who had a lot of their money in superannuation. So real sympathy for them. And it hasn't just been equities markets. The property market's been affected, particularly commercial property, which I still think's got a way to go, high-rise units, and high-priced and medium-priced housing has really been hit. The one area that hasn't been hit is in the lower quartile. That is custodian houses. We just haven't felt the effect of it. And that's not by good design, that's actually by using what we would have as our history. And the history I had was back in 1987 through to 1991, there was a run on the property market after the stock market had crashed. And generally that's what happens. The stock market crashes and then the property market runs. 1991, there was a terrible recession. Interest rates, borrowing rates I should say, were at nearly 18% on investment property. The unemployment rate was over 12% and there was an amazing oversupply of property. Back in 1991, I had commercial property and I had a lot of regional property. In fact, over 100 properties in regional areas. And I learnt the hard way. They get absolutely sacrificed. So when I wrote the book 7 Steps to Wealth some 7-8 years later, I used that experience to say, stick with housing in the lower quartile in capital cities. And you literally can't go wrong, particularly if it's around or under the median house price. It just goes up, bumps along and goes up again. And what we're finding is an underpinning of that market, which is the custodian market, by the government's foray into the first homeowners grant. And that's the one thing that's working in their initiatives that's giving some momentum to the market. So great for us. Now, how is that transpiring? Well, probably I'd say custodian is a reasonable barometer or a litmus test for how the market's faring and investors' appetite for investment property. We had a record December. We had record January. And the numbers at our seminars, if ever that's a litmus test, are absolutely full. We've got people on waiting lists who can't get into seminars. Now what that tells me is that there's a lot of people looking to get into investment property. And what you'll soon find with interest rates coming now to that 5%, you could find that bottom end start to really bubble. I remember back in 87, stock market crashed. It wasn't until about March 1988 that we saw the earlier signs of it happening in the property market, and by August 1988 things are in full steam. What do I think is going to happen this time? I still think there'll be pressure at the high end and commercial property, but that low end residential, I think you'll find that'll be the place that will really start to tick. So watch out for that. And it affects all of us because we all have properties. When we talk about getting started, I'm really big on goals, as you know. And I just finished a round of seminars called Kickstart 2009. And in it, I was proud to release this goal book, which is our goal book for 2009. It's a 64-page goal book, and if you're somebody who couldn't make it to our Kickstart, please email me direct and I'd love to send you a copy of this goal book. And it's a great opportunity for you to actually condense down what you want to achieve and then break it down quarter by quarter. It's also got some helpful tools in here on calculating your borrowing capacity, managing your portfolios, and also updates as to when we've got events and things actually happening. On the back, it has a CD, focus CD, setting goals, visualising those goals, using your right brain. So if this is something that you'd like to get a copy of, email me, johnf@jlf.com.au, and I'd be happy to send this out to you as a valued custodian client. Finally, Custodian Land, the land syndicate that we announced early or late last year, is in full flight and it's really strong. In the last 4 weeks, we've raised over $8.5 million, and the syndicate's due to close when we reach $11 to $11.1 million, so not far to go. I'd strongly suggest any of you looking to get into the land development or join with me in land developing in Melbourne to get a copy of the prospectus and speak to somebody about it who's authorised. It really is a great opportunity for you to get in at the ground floor of land development in Melbourne, and particularly given the sale price of the land and the fact that Custodian are taking out nearly 50% of the lots. So really exciting time in that regard. I've got a lot of clients who are using equity in their properties that have gone up in value and borrowing $25,000 and $50,000 to do that. And we put a special feature for clients doing that, that if you put $50,000 into the syndicate, we'll waive the custodian fee and give you the first right of refusal on an actual property in the estate. So it gives you the opportunity of developing in the estate, but actually owning one of the end product. And finally, let me remind you, 2009 is going to go very quickly. One certain thing you want to put on your calendar is our client conference. It's a fantastic 3-day event, the last weekend in June, which we have it each year on the Gold Coast. Great reason, great excuse for you to holiday up here, fully tax deductible because you're going to be learning a lot about property, and we have a great lineup of speakers from economics to health to motivation to just everything. Plus I'll be doing a whole series on managing your property portfolio, managing your cash flow, identifying opportunities in interest rates, finance, rentals, the whole gambit. If you're wanting details on the client conference, you can go to a special website, clientconference.com.au. As usual, if you've got any questions, stay in touch. Email me, email your consultant, and the more you can keep flowing, the better things will be for you. Remember, it's what you put into things that determine what you'll get out of it. Like anything else, and Custodian's there for you.